Hey, Bulls, we are back. We are back. It is Thursday, February 16th, 2023. Back with another dose of economic reality. Yes, I'm bundled up today. It actually got down into the 30s last night here in San Diego. The reason I mention this, people ask me sometimes why I'm bundled up if I'm in San Diego. Well, it gets cold at night. And actually, I had to use my ice scraper this morning. It's only less than 10 times a year I have to use the ice scraper. This morning was one of those mornings, a combination of being a little moist and cold temperatures, ice scraper, even in San Diego. So I know I'm not up in the mountains. It does snow in the mountains. But yeah, just thought I'd let you guys know. Most of you probably know, but I'm in an unheated garage. This is my studio because I have family occupying my rooms in my house. One of my goals in the very near future is going to be to move up to a bigger home with an extra bedroom so I can have a studio and a few extra things. A bigger yard would be nice to do more growing stuff, more farming stuff like that. Not really farming in where I'm at, but at least growing some more food. All right, but let's get into the news here. The markets, the cost of living, the slow motion economic collapse that we're all living through. Some of us are actually not feeling it. So the term economic collapse is something that's debatable. For example, there's people right now doing better than ever. But if you look at most people, we're still in about that 70% range, living paycheck to paycheck, debt skyrocketing, credit card debt especially. We're going to talk about that in a minute. But let's talk about the cost of living and specifically the CPI number. Now, the CPI number, the cost of living, the consumer price index, is highly flawed. It leaves out a lot of things that people need to just to get by, but we still look at it because it can show us a trend if you look at the same number or the same data, from month to month. So what do we see? We see this consumer data from consumer price index rather from October through December was recently revised higher. So now inflation is even worse than what we were told back in those months. And remember, they said inflation is I'm trying to remember the word they used. Inflation is decelerating, or they said there's disinflation, right? So basically, it's a fancy way of saying prices are still going up, just not as fast. And the markets ate that up. The markets, remember, took off for several weeks, several months, based on disinflation, based on inflation coming down. Inflation coming down is still bad news. It just means prices are going up more slowly. And again, people don't need prices to go up more, even if it is more slowly. People need prices to come down. The people that are living paycheck to paycheck, they're not sitting there hoping that prices go up more. Oh, I hope prices only go up by 2% this month. Oh, I hope my rent only goes up by 3% this year. Nobody's hoping for higher prices, right? I mean, yes, a lower increase is better than a higher increase, but people really need deflation. They need a lower cost of living, lower prices across the board. CPI just got revised higher for October through December. That was one headline. Wolf Street. Even CNN, here, get this. CNN, quote, this is the headline just recently. Bad news, consumer prices actually climbed in December. So we were told that, things were coming down. Not true at all. It's amazing, though, how many market rallies we see based on this data only a couple months later to get revised higher. And not just 1 month, October, November, and December revised higher. So now we're told that inflation is more sticky than we thought. Remember, first it was transitory. It was just going to be a temporary rise in prices because of the shutdowns and the health crisis, and then it was a disinflation, and now it's sticky inflation. It's sticking around longer than the experts expected. But folks, we've got a lot of forces that are going to lead to more and more inflation. We're draining the petroleum reserves still, and we're still high. I mean, prices came down compared to last summer, but oil is going to go much higher this summer. Just wait and see. We've got other things happening. That big thing in Ohio with the chemical spill, big cloud of toxic event basically, and a lot of farms, a lot of farmlands contaminated. People are told it's safe to go back to their residences, yet we have animals, a lot of dead fish, a lot of dead animals, farm animals, even pets. It's real sad. It's really sad. So it's going to be more production destruction, production destruction. Every time a farm goes bankrupt, every time farmland gets contaminated, the whole area gets contaminated, even the drinking water, we're seeing production destruction, right? So farms, jobs being sent overseas still. We told you about the outsourcing here a couple reports ago. More outsourcing happening, more companies sending jobs overseas. We're completely being lied to about the jobs numbers. We're told that all these jobs are being added. We're not told that a lot of them are part-time jobs. We're not told that when somebody quits a job or leaves one job and gets another one, they add on the job that the person went to, but they don't subtract the job that the person left. That's part of it. Also, layoffs are not subtracted from the jobs number. So this whole economic, what they tried to call an economic recovery, it's a scam. And remember, after the health crisis in 2020, 2021, 2022, we were told there's an economic recovery. How many times do we hear that? This economic recovery, economic recovery. Sure, there was a recovery in the markets after trillions of dollars of money was flooded into the system. We saw a big brief period of deflation, falling stock prices, even oil went negative. Remember, oil went negative very briefly, and then we saw everything skyrocket back up again, including the cost of living. And it's not going to stop because not anything's done to fix the underlying issues, right? Look at all these spending packages, all these bills that were supposed to fight inflation, and now we're told that the last 3 months has been revised even higher. And it was already, prices were rising. Now prices are rising even faster than we were told. So get ready, folks. It's going to get real this year in 2023. Let's talk about debt. Now, first of all, there's some good news, or it's being reported as good news. Consumers are spending money. Supposedly that's good news because that helps the economy. But here's the bad part about consumer spending. Another record high in credit card debt. Troubling signs emerge as credit card debt hits record high. That's the headline. That's not my words. Detroit Free Press, U.S. credit card debt soars. USA Today, U.S. credit card debt at record high. So people are living off of credit cards now, and it's been like that for a while, but we're seeing record high after record high after record high, and not just a record high, that's bad enough, but the amount of increase is accelerating, right? So yes, it's increasing, debt's always increasing, but the increases are accelerating. So it's getting worse. Not only is it getting higher, it's getting worse. So this great news that's being talked about now in the business news networks about how consumer spending is higher. Yes, it's higher because people are running up more credit card debt and prices are higher. So of course, spending is going to be higher. They won't tell you that though. All right, speaking of economic collapse, a slow motion collapse, let's talk about layoffs. We've got more announcements today. Bank of America cutting jobs in their investment banking division. DocuSign laying off about 10% of their workforce. That's almost 700 people. So more big announcements here. DigitalOcean, 200 people. Wix.com, almost 400 people. Let's see what else we've got here today. These are just recent announcements here. Neiman Marcus, 500 layoffs. It continues, folks. So get ready. I mean, things are going to continue to get worse for the most part. There are opportunities, though, within the madness. Here's one trade that I'm in right now. I am invested in an ETF. I just got into it here, 4 days ago. Remember, natural gas prices skyrocketed, and then they plunged here just recently. And I don't have my charts up on here today, obviously, but this natural gas fund, this ETF, was at $32, and it's plunged all the way down now to about $8. It's called UNG. For those of you looking to benefit from this volatility, and natural gas has been very volatile here in the price, and also the ETF, which tracks the natural gas price. All right, so just one trade that I'm in, but mostly I'm being passive right now. I'm taking a wait and see approach, and I'm happy to be here, keeping up on this economic collapse for you guys and kind of riding the storm with you. Hopefully you're doing better than ever. Hopefully you're one of the 20 to 30% that is doing better and not the 70% that continues to get further and further and further into debt each month. If you are, don't be sad. Still be thankful that we live in a country. It could be worse. Some other countries have way worse inflation than we do, but we need to continue to get ready for things to get worse. The dollar is being dethroned as the world reserve currency. So all of these luxuries that we've been able to afford here in the U.S., those days are coming to an end. And there's a lot of other things coming together at the same time, folks. The cost of living and inflation is just going to get worse as the dollar continues to get devalued. It's going to be it. So we'll keep an eye on it for you here. We'll see how the stock market reacts to these backward revisions too, these upward revisions looking back, the past few months. It's interesting that the markets take off when CPI is reporting to be slowing down or improving, but yet when it's backward revised higher for several months in a row, you don't see the markets tank on the same, on the news that supposedly what was the cause of the markets going higher. So wacky times, folks. We're going to keep an eye on it for you. Thanks, everybody, for watching. Big love. Keep stacking. Bye for now, and peace.